PP&E. Well, it's an oldie and a goodie, right? And I say that because, to be honest, unfortunately, a lot of these topics you really haven't seen, maybe even in school. It's kind of surprising, whether you're just coming out of school or it's been a while. A lot of these topics you haven't seen, and it blows my mind. It really does. But hey, I'm not writing the curriculum for these universities. For PP&E, this is definitely something that you saw in school. I'll just say it straight up. Anyone who's been in college accounting has seen this. We're going to be talking about depreciation. We're going to be talking about equipment, property, the fact that you don't depreciate land, fixed assets. Fixed assets would be another great name for this section. Let's see the summary of what we've got waiting in store for us. All right, well, we got a lot, so I'm excited. I'll take a dip out when we get to those 5 and 6. So I know I'm blocking it. I see that right there. Well, first we want to calculate the gross and net property, plant, and equipment balances and prepare journal entries. You've got your carrying value. You purchase some PP&E minus depreciation, plus any additions that you capitalize. What is going to be your current value, and prepare those journal entries. We want to calculate gains and losses on the disposal of fixed assets that are going to be recognized in the financial statements. So you debit loss when you have a loss, just like you debit an expense. You debit a discount on a bond. You credit revenue. You credit a gain, and you credit a premium on a bond. Those are ones that you might not be as familiar with. So definitely get familiar with those accounts, right? Gains and losses. We want to measure impairment losses on long-lived assets to be recognized in the financial statements. Maybe a building is in an area that's kind of on the downturn economically. We might have to write down and impair that building because it's not as valuable as it once was. We also want to calculate the amounts necessary to prepare journal entries to record a non-monetary exchange. Well, I don't have any cash. I want your building, so I'll offer you my truck. And if we have that exchange, non-monetary right there. We also want to determine whether an asset qualifies to be reported as held for sale in the financial statements, which would make it inventory and not a fixed asset. Very important there. If I am a construction company, a bunch of cars and trucks would probably be PP&E. If I am a dealership, a bunch of cars is probably going to be inventory, right? That makes sense. Lastly, we want to adjust the carrying amount of assets held for sale and calculate the loss to be recognized, right there, in the financial statements. Lots to see here. I don't want to keep you waiting. I'm excited. Let's dive in and see what we've got.